want to make a review of a trade that we had took this week. Um, it was a gold on SPX 500, which is the SPY 500 Standard and Poor's 500. It ended up being a take profit. So what happened was, uh, if we zoom out, we got overall price being bullish. You see, just making a series of higher highs, higher lows, breaking to the upside, come back to retest, continue for the buy, find support at lows, basically a continuation. Basically just overall still bullish. Entering into this week, we did our usual setup. We box in price and just to see how things go. As you see, what I'm saying, we had this Fibonacci here, and price did reach our negative 27. Negative 27 can indicate a reversal point. So I'll just mindful of that knowing that price could potentially, begin selling here, but the trend is overall bullish, there's also a chance for price to continue to go higher. As you see, price hit this negative 27, and the previous low here was being respected. Not only would you count this as once? Well, you'll count it once because after it's solidified as a low. So you respect it once, twice, three times. So I just labeled this as a 1 hour break of structure because the price break on this, there's a chance the price could continue to go lower, and the trend is now, going into the sale. But you see, before ending the week, actually on Thursday, we got an impulsive break up, breaking above this structure here, broke above this structure here, and even this structure. So in scenarios like this, I really like to see, those moves that break multiple structures. We have examples where, price may break just one structure, but if it breaks two to three, yeah, that's just a great indication that price is going to, continue to the upside like how I did. Uh, I really don't use trend lines, but I just want to see this here. So even this right here could have been a trend line break and retest. So resistance, resistance, resistance. You got a break above and you found support, and immediately you got that nice push up. So if you use trend lines as your strategy, you know what I'm saying, you can see that. If you use it as a confluence, you see that as well. But mine was more so you got the break of two structure points, price come back and retest, and it made its way down to basically these highs, this high here, pushed up, then it started to, find support at these lows and the week ended. So so what I usually do in a scenario like this, I would box in price. Like I already said, we already had this 1 hour break structure identified. So at the end of the week, I just want to uh, box in this low and also the high. So as you see, I got this solid blue line here, right on under this field here. So I identified that it's the low. Then we have this high here. I identified that it's the high. And you see, what I'm saying, this candle here was the Friday close. Immediately you have a gap up and price push up open here on Sunday. So this right here is a break of structure. And if you haven't noticed, my candles for the bullish, for the buys, for the bulls are blue, and for the bears, they are white candles. For the sellings are white candles. So what price did, it gapped up above this, break a structure, bearish candle, come back and retest, and you see price start to push up, even break above this high point. So what this was just a break and a retest. I probably didn't already mention this, but this is I identified this as a 1 hour break structure since that was like the half point for it. So this is the 1 hour break structure. You see price broke retest continue to trade higher. Um, I believe at the time when this was happening, I didn't have like a fib or anything set, but I did have this identified as a daily breaker structure right here, a daily level, a breaker structure. And you see, Sunday it was going. Monday continued to push up. New York session, it came back and retest this point, and that's where I was able to draw my fib. So we got this low point because this was the start of the impulse. This is the impulse up. You want to take it to your point where price starts to correct. We found resistance here, start to sell down. Um, so this is point one, point two, and you see the fib retrace down to 23.6. 23.6 to me is just a continuation of the trend. And what I was doing was just waiting on, my confirmations, my confluences. So my confluences here was basically, how I trade a break and a retest, and you look for those candlesticks. Um, Pretty sure I did this. Let's see. Now I didn't do it on 30 minutes, so it actually was a hour that I did this. So we seen this candle push down. Then you see you have this counter that actually came back and retest your daily breaker structure, actually start to push up. So high volume, low volume. What I like to see after that is another high volume candle. And you see, that's what price did. But what I actually did was got in this trade at the close of this retest. And I got my setup here. So yeah, I did. I got in right here. So basically, if I was just to replicate what I did and long position is here. So I got in at the close, which is here. We had a little bit of drawdown. Uh, I was targeting this negative 27. My stop loss is right below the low. It wasn't that close. So what I went for is more so like a nearly a 3 to 1, something like that. I'm looking at it from my phone where I actually took the position. And see if it'll focus. Nope, not focusing. But it's basically the same thing. Into this position on Monday. Currently it's Tuesday, so we actually took profit um, today. Uh, yeah, we basically want to just review this trade. So what I did end up making on this position was $88, $88.70. So with this trade, so I just got done, doing some self reflection with myself, and of course, you don't want to compare yourself to others because these other people work ethics and experience and mindset goes into how they are, how they trade. But I was just watching this video and I just seen how a person, who been doing it longer than me, who's trading full time, actually, started account with 2,000 and double the count within a day. Or, yeah, that's basically what it did, double the count in one day. Withdraw his initial profits, which is 2,000, got it to like 4,000, 5,000, withdrew the 2,000. Now it's, all his profit is back. I mean, the money back that he initially invested. Then after that, double the count again, 2 to 5, 2 to 9, 2 to 10. You see what I'm saying? And actually just repeating it on a day in consistent basis. Of course, and that actually happened within a week, uh, according to that video. Um, but the point I was making is I was doing some self reflection and I was just saying the reason why I didn't go larger in this position is basically because confidence. And that's basically what it was. So, that individual or you just anybody who's profitable when it comes to trading are confident in the setup. They are accepting the risk. They have a certain type of psychology, a certain type of mindset, a certain type of approach to the market. And we're definitely adapting it as we are consistently doing this and seeing, these setups happening, taking our lessons from, our stop losses, um, and just getting better from there. But like I said, I actually profited $88 on this position. So from the entry to the take profit, that was nearly 900 pips or points. I believe that's, yeah, I know that's the correct way. So 900, almost 1,000. So that was theoretically, a nice move, like 1,000 points, 1,000. I believe it's pips. It might be points, but either one. I took 1,000, nearly 1,000. I just say 900. 900 pips, 900 points to profit. Like, this good. Like, I'm not catching like small moves. And there's nothing wrong with people that do take those smaller moves and are, great at doing those things. But, so I capitalize on, an entire move. And that's good. But like I said, my confidence in this trade wasn't as high. If it was higher, we would have, of course, gained more. Of course, we would have risked more. But that's just how it is. You risk more to gain more. So this was 3-1, and I end up profiting $80. That just simply means that so 369. So basically $30, nearly 30, maybe like around 20, like 25 to $30 potential loss in this setup to make that 30. But if we was to do our strategy, if we was to be risking 5% of the account, we would have been risking, 250 $250 to potentially make $750. Uh, and that, money like that, honestly, in my current status, the next level for me. You know what I'm saying? And that's what we're here for, to build their confidence, continue to grow so that we can, make those type of transactions and transitions. Because I know I'm on the way to that point, because we was at a point where I had an employer and I made $1,000 in a day, doing the type of work that I was doing. And I believe in that particular week, we had maybe like two or three. I believe it was three in total lined up. So potentially we could have made 3,000, but the job was, something. Uh, what I learned from that experience was that work, because prior to that, I was making. I really don't remember, but I wasn't making $1,000 in one day. Uh, I only think $1,000 within 1 week of working. I'm trying to remember, but I just know I wasn't making $1,000 in a day. So to make that type of transition from, let's just say in the day out doing 200, like that's a massive jump. Like in the day made 200, uh, and going to one day making 1,000, like that's a big jump. And, like I just had to think about the type of work that it was. It was more difficult for me. It was more of a challenge. It took me longer to do these jobs. I remember going to these places early in the day, leaving at night. So basically, like a whole day worth of work to make 1,000. It was a bigger job, like what I'm saying, residential to commercial. Like it's a bigger job, bigger pay. Um, it's just like that step in the levels. You know what I'm saying? Is what it took us to make that type of money. But really, what got me to that point was, you know what I'm saying, the work that I had put in and the person that I become, the person that I had become, that, you know, my, I guess, supervisor or manager seen like, hey, I want to put you on this job. I want to put Curtis on this job. I see you, you know what I'm saying, doing this. We brought this opportunity to you. Like, I was just attracting these type of things, and I appreciate the lesson. But like I said, that really opened my mind to knowing that if I was able to make $1,000 in a day from doing that type of work, you know what I'm saying, I can do it here because the door is already open. Like, we made $1,000 in a day from doing a job. And if I take this approach of using this as a job, you know, so we can make $1,000 in a day. But like I said, the door is open. We done it once, you know, so we can do it again. But yeah, I do remember. I think like I said, I had three of those jobs, so it would have been potentially 3,000 made for me. I think I ended up doing two. It was, you know, a challenge for me um, at the time, so we ended up doing two, making 2,000. Uh, but there's still a lot, you know what I'm saying, at the time for me. Like I said, just a growth, next level for me. But just going and relating to this, and that's even like with my current state of employment and, you know what I'm saying, what I heard from other people. Like, there's a person that, you know, my managers, I heard like, man, this is a good work, or I would like to have this person over here. And when I had talked to that individual, they were saying like all it is confidence. Like, that was really how he explained it to me. It's not like the work that we did. It ain't like he did something different. He just said confidence. And pardon me. So that's how I'm just relating it all to this. Like, it's just the confidence going to this trade. Like I said, if we would have went with our risking 5% to make, you know what I'm saying, that would have been 15%, nearly a 3 to 1. Like I said, 250, risking 250 to potentially make 750. And that's just uh like a Monday to Tuesday. Like, it's still early every week. 750. Um, but yeah, that really just opened me up to that. Uh, but yeah, yeah, I just wanted to talk about that. We can see, and I would say just back testing has really helped me. Uh, and I got on here, like the foundation of trading is like level one is like back testing. So getting familiar with the charts, you know, seeing the patterns, seeing how things flow. Tools to psychology, you know what I'm saying, basically the mindset behind it. Of course, the psychology within ourselves, but I'm also thinking like the psychology within the markets, like how things happen, how things move, the entry and exit strategy, which we have one, which is, like I said, in this scenario, break and retest. What on that candlestick confirmation, uh, exits, exits would have been, well, entry is like that candlestick pattern, and exits are, you know what I'm saying, breaking structure lows, and, you know, using Fibonacci as uh, also the exit. Risk management, and that's, you know, and I believe we can really translate risk management to confidence. Like, how confident am I in this trade? If I have a higher confidence in this trade, I'm willing to risk more. If I have low confidence in this trade, I'm willing to, well, I'm likely to risk less. So we really can translate risk management into confidence. And, you know, the fifth, the highest pillar that we got on here is goal. So goal setting, whether it be whatever, monetary, uh, personal, personal, like, I come to the charts every day. I'm going to study. I'm going to take trades. I'm going to review. I'm going to set my alerts. I'm going to, do things like this, like goal setting. But yeah, that was good. Let me actually write that so I don't forget that. Risk management or confidence. 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 Okay. So how confident I am. Risk management. Okay. Interesting. But yeah, we just want to take a quick review on that because we did take this trade. With the combined trade that I did take this week, if I do this right here, we took a trade on gold. Where is that trade? That trade was what? Where did I take that position? I had to go on my watch account to find out, but we actually took a trade on gold. This was it this week or last week? Let's see. I think it actually might have been this right here. Break it alone. Market open. Came back, retest. Yeah, I think it was it. And I'm taking this trade here. So I didn't take it all the way down here. It was, somewhere not all the way down here to this red point, but we did take this trade. Market open. Same thing like the other one. Uh uh SPX. Market close here, open here, break, impulse up, retest, start to reject. And we look at the target, on the downside. So we took the sale profit on that 122, and then we took this trade today, $80. So basically, I'm saying $200 right now in profits that we took this week so far from trading. Um, Nearly 5% increase on our overall account balance. Um, but yeah, let's see. I think that's pretty much it. I want to say for that. Um, we do see that. Pardon me, we do see. Let me see this. This is actually something that I didn't do. So from here to there, pull it back to 50%, then negative 61 forward. So in a situation like this, what I'm working on is adapting the strategy to actually get in on those, you know, to add another position. So we basically got in here. Right here was another potential area for entry. So we got that impulse to break above, letting us know price is going to continue. Of course, a correction comes after impulse. Price could have continued up, made the move immediately, but what it did was pushed up, got our impulse. Our correction, pardon me, pulled back to the 50%, and then price started to push up to this overall take profit. So something like that. Um, this actually looked like a good entry candle here. So you see price push down, then consolidate 50% here. Set this like breaker structure here. Price bullish engulfing, break above. Let's get an entry here, push down a little bit, and continue up. So there could have been a potential second entry right here. Uh, but at the time, this was 3 in the morning. So basically, I could have seen this is the time I was actually getting off work. So somewhere around here, we would have seen it. So yeah, that was good. Uh, Nevertheless, but need the overall push in our direction. All right, so hmm, let me make a pause on this. So what we're gonna do is back test our strategy. Let's do that. So what I usually do is go on gold and back test my strategy. But I do think I am feeling the challenge and what's new what I'm saying, doing it with SPX. So we're actually gonna do it on here. So we're gonna replay, run the bar, same approach. We're gonna end this week. So it already started Monday. So let's go today. Monday. It's Tuesday, Wednesday, Thursday, Friday. And it's actually the first of the month as well. What year is this? 2019. All right, so same approach. So overall bullish. Overall bullish. You see, we have this correction. I mean, it's impulse correction, impulse correction. And you got to break above, impulse correction, impulse correction. You got to break above here this way. So overall bullish. So bias will be more prominent currently. So what I'm going to do is actually mark up this high here. This is weekly. And that's pretty much all I need for a higher time frame. So just have an overall bias of what price is doing, what direction. Okay, we're bullish right now. We got this break above. We got the close right here the previous week. This week actually opened and pushed up higher. So, and you see we did get that retest before a continuation on higher. So now we're down to our daily, and we could drop feeder since we're breaking here above. So this here would be maybe like this impulse correction 7.6 and your continuation. So we could be looking for a price to target this 20 negative 27 up here. So let's actually do visibility only here. Let's see what else do I need on the daily before I drop to lower time frame. I really do think that's majority it. When we get down, we're gonna see these lows here. Probably can mark it up now, but let's see what it looks like on 4 hours. So 4 hours looks like that. So a little different. Let's see, I'm just see what it looks like when we mark it here. And see that here. 4. So it looks something like that. I really don't like how the lines be doing that, but we be mindful of it. And we see price did come back and retest this area. So that's more so what we really want and need this major level here. Uh, like trend, you can draw fields like for this here, for instance. Uh, I think it would be more so this one because it's the impulsive break up. Or would it be like this from next level? See that high impulse correction, 100%. Currently at negative 27. So I'm actually leaning towards that. So I'm gonna leave that there for now. Uh, just know that we had this negative 61 point right here as well. Let's see. I think I'm gonna get there. So what I have here, this here, the far break structure, but this is still lining up with this low, so we can leave that there. Recently broke the structure here, so if price does want to come back for a retest, it will make sense because we did just break a structure high. And as soon as we have impulse break, we have a correction. So let's do like far break structure. And I'll stretch this out to the end of the week. So basically Friday, far break structure. And we see price continue. So pretty much nothing else that I need here. Could do this here. Six. Retest. Continue higher. Okay. So this here is your impulse break structure. Let me see what that look like if we place that here. It's the low point. 1600. So just put that back how it was. Because I like how that is. Okay, I got my floor breaker structure here. And you have this point, which is a 1 hour breaker structure, because this point here was the break of the highs. And that's the lowest it closed at before continuing what I actually what we here with this bearish candle. So here would be our 1 hour break structure. I'm stretch this out to let's stretch it out to Tuesday. 1 hour break structure. So doing this point here because from this relative point here, this break, there was the impulse move, and this is that low. Of course, we have this high and low right here being made, but that's more so what I'm gonna use for this here. More so boxing in price from that high and low that I usually do. So I'm gonna do this to like New York, and we're gonna turn this to 1 hour. I'm gonna do the same thing for the highs. So I got this 4 hour field in the back, -27 here. I mean -6 going from that here. I have this 1 hour field here impulse. Price corrects, pull it back to 23.6, breaks above, and it's sharp here that way. So we could see price open immediately and go to this area, or we could see price, you know what I'm saying, trace a bit, maybe come back to this point, and if we do get like a confirmation, we can take that trade, which really won't be a big trade on 1 hour, but let's go and start. Okay, just like I said, so it closed here. You see immediately price pushed up to this negative 27 with this field impulse correction 23.6 continuation of the trend -27. So I'm interested to see what price continue to do. If it actually continues here and potentially go to -6.18, or will it start to retrace a bit? So yeah, so we see like we had a bias and seeing the overall things were bullish. Um, Now we had that break and retest, uh, and it comes to this price is going up. Uh, so like to reach this negative 27 here, let's do this really quick. Reach this negative 27. And you see price never close below that, so we get there. That's just what we use to start ourselves off for the week. See what's direction price goes. What you see, 23.6, reach here at negative 27. Next kind of bearish. Next kind of the bullish candle breaking above. And probably just continue from there. So in a scenario like that, how could have we capitalized off that move? So let's just say we did get in here this here. Stop loss would have been, of course, under this low. And if we would target that, it would have been a 3 to 1. One, two, three, four, five, 6, 7, 8 hours. That bad. Okay. Well, we're currently at this negative 6.18, extremely bullish. We could see price begin to sell here. And I think that's what I had. I think I just had this 4 hour. There's something else. I had to leave this up. But we see negative 6.1 both of these fields here. Correction, negative 27, negative 6.4. It's actually a 4 hour. See this. But I do see that based off this impulse uh, correction, continuation, you see negative 27 this year. So I'm interested to see if price is going to continue to push higher, reach this negative 27, just to see how price reacts from there. So we are still pushing up for 5, 6. Okay. So my thing is just really learning from this. So let's see. So overall, we've seen that the market had opened up and continued to push. And I want to say this real quick. It really seems like, and it's just me thinking right now, the best learning you can receive is actually taking the trade. Um, yeah, just really just taking it because, of course, I'm reviewing it now and I'm saying things like, okay, I see this here, this right here could have happened. I could have done this, but it's really more so like you do it and you can learn from it. And especially since I'm back testing. Uh, if I have the instincts of like, okay, I think this can buy. I'm seeing some signs. Okay, let me take this trade. You take this position, whatever the outcome is. You know, what I'm saying you learn from it, but you took some action behind it, and like I said, you gained something from it. So I really see how that can be beneficial for you. Of course, you're back testing, and you like seeing things like here, but you definitely can be taking advantage of that. So let's just say, for instance, We did get in here. Wrong one. Uh, wrong position. We got in here. Let's say we were targeting this nigga, this major, negative 27. And stop loss, which would low is low. You'll be willing to risk that risk free trade, or you can have it right here under that low. And it would have been like a 5 to 1 type of trade. So, like I said, I really think like the best way to learn is really to like execute and take those trades instead of me saying, "Oh, in a scenario like this, I would have did this," instead of being in the scenarios and actually doing it. But yeah, we see we at this negative 27. We see we starting to get like some type of rejection here. Um, so we overall broke this structure. We did have a break and a retest before the continuation up, which prompted us to continue pushing up because we did break and retest. I am curious to see what price does because we had a strong impulse move and we really didn't have any corrections yet. So let's see if price begins to retrace here. And if we do begin to retrace here, we got this 4 hour breaker structure level, this previous high. And we also have these like low points here. This is a 1 hour breaker structure here that I have marked up. So we already reached that, so we can delete that here. It's currently 1 hour before New York open. We see prices start to reject here. So what we really want to see is a break of these lows here. So we can mark this up here. Stretch it to there. Not break the structure because we see we pretty much haven't broke the structure, which we're respecting it. And now this is another one here. So if we get a break under here, retest, you know what I'm saying, we can see that potential of capitalizing on this here. Okay, so we see price is pushing its way down. It's currently under this level, but you see immediately price, you know what I'm saying, pushes itself back up. So in scenarios like this, I definitely like to, I definitely have taken trades like this, for instance. Okay, I got this right here. Price break under. Oh, that's the break structure. Let me go and get in that sale. But the overall best thing to see is like that break, retest, and continuation in that direction. Or see if you have that break. Let me take this out. If you had that break where like price just really pushes away from it, because this is still like within that range of it. So if price just really like broke and continue lower, then it's like a thing. Like even this right here, like we have to just push down, but you see prices is like a wick at the bottom. So pushing price up. So price isn't ready to make that transition to make that sale just yet. Even though we are breaking under it, they could have been like a sign, but we are failing to like close lower. And like I said, immediately you see this price candle bullish and breaking this high again. So basically continue bullish. Let's click. So basically what this is looking like, get a break above, came back to retest here, and it is pushing up potentially. So in a scenario like that, this is the low point, this is the high point, and you see price did come back and retest down to 23.6, continuation of the trend. We can easily see price head to this negative 27. What I'm more so looking forward to confirm this will be a break above here. But let's actually take this chance to see how price would react if we seen something like this. Okay, price basically broke higher again, letting us know the direction it wants to go. You see it did pull back to this point here, and it's continuing to push up. And let's see how we could, how price really reacts. Like I said, pull back to 23.6, and we're going based off this field here, which just mean continuation of the trend. So we just enter into a long position. We always like to see our potential risk. Would I take it to this low? Or would I take it down to this low? Before I make that decision, let's zoom out. Let's see if we go to this negative 27. It is above a 1-to-1. If we go under this low, we went for a 1-to-5. It'll be like that under that low. And we're looking to take it to this negative 27 based off this current point here. Let's see if we put it under this low. They give us a greater risk reward, of course, nearly a 3. I'm trying to see if that's what I want to do. I do believe the more safest thing to do is to have it under here and go for that 1-to-5. Um, and like I said, when it comes to confidence, which is, your risk management, how confident are you in saying that, okay, I want to risk this much amount of money with the potential price heading here to make X amount of money versus the stop loss here, which would be like a 3-to-1 for us. It'll be 3 on the dot right here. How confident am I in this? And it's a good question. So it will more so be like this then. If we place the bill, impulse, you see correction, you see price pull it back to 6.8. I'm looking forward to continue higher. 6.8. So I'm actually want to give this a try. Like I said, I think I do, or I would more so prefer a price to close above here just to confirm it. But we already did have this holding the support right here. You see, price came up and broke above this point here. Came back, pulled back, high low. Well, it's not a high low until it breaks it and continue to the upside. But let's actually take this trade. So we're going for a buy, and we're also looking at what we're potentially risking first before profiting here. And I'm going to buy, buy, buy one more time. So 240 risk to potentially like 720. Let's break these out. Okay, so we see price did break above here, credit this low point, and we see price break on this low. So I'm actually interested to see if price is going to continue selling here and actually get under this low, or what price is going to do. Okay, so it did. Okay. So maybe 27. So let's actually delete this and let's roll this to, okay. Yeah, let's say this here. the one structure. It actually moved down lower since we had this here. Uh, or if I would have never changed, just kept it the same one, we see that price had this huge bearish candle breaking under. You see next candle is actually starting to push lower. So if you want looking for like that breaking retest, you see that the breaking under this candle right here, rejecting potentially, you know what I'm saying, going over to it's 27.60. So it look like it came back to that point, rejecting, like at 50. So took a trade. So like this, short up here, like to get your potential loss. We can put it there. We talked to 27. Really does seem like it has the potential to continue lower. And like I said, I'm really open to taking those like the 1.5s and just knowing that we can eventually grow into a larger risk reward. But let's actually get it in trend. So we are still here. We're gonna look at our loss first. Then we go to profit. Let's share, share. Okay, so this is pretty wild. Our prices are just moving like that. It goes down. This your correction. So this here would have been your break structure point. You see price came back and retest that point. Put it down and continue to hold. So and then reach your negative 27. Today. So I reached negative 27. So I really think this right here could be like your overall structure point. So you know you have impulse, correction, continuation, but I think this is that one leg. So we want some like here. And I noticed that, sometimes when you have like that vertical structure could be like it's going to the upside, but it's more so like making it leg for your impulse, potential correction, to continuation. You see we made a double top here. We start to see we can program this low. So how confident am I in my thinking analysis with that. Am I willing to risk it to see? Let's see. So if he was to get into a sell here, it'll look something like this. Short position here. Stop loss going above this high here now. Looking to target this 27. So nearly a 2-to-1 going based off this current entry point. Pushing 27. But you do have to be mindful of this. Yeah, I'm actually feeling good about this. Let me take this sale. So what I've been doing is more so sale, stop loss here, take profit yes. Yeah. I click it again, it'll be like 300, so that'd be way more over what I'm trying to reach. So let's go here, go back, and sell, sell. So I really like to go a little bit under it instead of above it. So let me remove this and do like 30 position, 30%. Immediately, immediately. Okay, let me see. So, hmm, so from here to here, maybe 27. You get this move up, burger structure. That's sure. Real quick, it's Thursday, so I'm not looking to take any more trades. I did take it one trade that I take here, 15 trades. So really more, really 15. It was really me like clicking those what you call this. But I really don't like to take too many trades. So let's do it on. Oh yeah, so enter here, stop loss. Enter here, put it down here. So we took 3 trades. So we took this loss, took this profit here. We could have done this, made the last trade we took for that week. Unless we were like super confident in knowing where price is going to go, what it's going to do next. Um, I was more so going ahead of myself, looking at something like that and saying, hey, there's more. So it's going to continue lower. But going based off price action, looking at structure, you see you got that break. And after the price break, what it do, give you a correction before the continuation. You see it pushed all the way up. So lessons to be learned. We're about an hour in, but we're going to end it here.